Bonds are a form of long-term debt, a liability of a company that has a specified principal, value, and maturity date. Its principal is also called the face value, in which the amount of the bond is printed on the face, or its par value company as the debtor is the bond issuer and investor as creditor. If the bondholders receive interest that is stated on the face of the bond, interest is also called the yield expressed as current yield or yield to maturity. During the old practices, bonds were used with coupons that the bondholders most from the bond and redeem from the interest. To date, a bond certificate issued. Redemption of interest can be semi-annually or annual, expressed in simple annual express. Each debt instrument has terms that the debtor must meet. The terms, also called convenience, are stated in a legal document known as indenture and may vary or the financially condition of the borrower. This convenience is intended to protect the bondholders from the risk that the bond issuer could incur after insurance. Common convenience may include Mayo. It is important to monitor the performance of the issuing company and be aware of the terms of the bond issue. The bond is said to be in default of the issuer does not make the required interest or principal payment, or it is violates one of the convenience identified in the indenture. If the issuer default, the indenture state what action the investor can take. When a company decides to issue bonds, it usually gets the services of an investment banker to facilitate the process. Investment bankers charge fees for the various services they provide the companies during the financing process. The level of fees will depend on the complexity of the bond offering and the number of services the issuer requires. That determine how much capital they would like to generate with the bond issue, and the cost of the borrowing. The bond issue can be tested for its effect on the balance sheet and income statement by creating pro forma financial statement. In changing the interest rate and financial assumption of the bond, the company can also decide if it will retire a certain proportion of the bond issue each year, or whether it plans to repay the entire principal and to maturity date. Even if the firm decides to give the principal for the duration of the bond's life, it will still have to plan for the eventual retirement of debt. Types of bonds. Bonds are rated based on the business and financial risk associated with the issuing company. The types of bond also figures into the risk calculation. Bond, secured bonds, debenture bonds, assumed bonds, guaranteed bonds, pure discount bonds, registered bonds, income bonds, participating bonds, convertible bonds, bonds with warrants, serial bonds, sinking fund bonds, callable bonds, perpetual bonds. According to type of security, secured bonds or mortgage bonds are backed and by the firm-owned property mortgage are the most common type of the secured bonds and backed by real estate asset. Other form of collateral may depend on the nature of the business of the bondissuer, such as an airline company may have its container vans as collateral, or a retailer can pledge account receivable from credit sales. If the firm default on its bond, the bondholder, represented by the trustee, could seize the asset and sell it to the settled debt. In some cases, if the bondholders were forced to sell the asset used as collateral, they may receive liquidation value rather than market value, and there may not be a guarantee that the sale would cover the in-depth of the borrowing of the suing company. Mortgage bonds are secured by land on specifically named properties such as land, building, equipment, and other fixed assets specifically pledged as security. Real estate mortgage, as per their subclasses, may include senior liens which have prior claim to fixed asset, pledged as security, or something called first mortgage bonds. Junior liens on subsequent claim to fixed asset, pledged as security, or subordinating to the senior liens, also called second mortgage or third mortgage bonds. Also, real estate mortgage may be classified according to the types of each issues, laws and issue wherein subsequent issue on the specific property pledged as collateral are not allowed. Open-end issue permit issuance of additional bonds or series of issues be made under the original for mortgage secured by a single liens limited open, and issue allows additional bonds to be sold after. According to participation of earnings, when voters approve tax levy to fund local school, a library, and structure in improvement, they may have authorized their local taxing authority to issue one of many types of municipal bonds. Municipal bonds or government bonds are used by counties, cities, municipality, or any other authorized public authority, such as school boards, highway commission for districts. According to method of retirement, bonds mature and the principal as well as interest shall be paid in full at a definite time and place. Sometimes, deviation from the agreement may happen, those classifying bonds according to its period of retirement. Serial bonds mature semi-annually or annually instead of all single-day. Strategy payment is the effect of payment in series. Sinking fund bonds require the issuer to deposit annually certain sum of money with the trustee of the issue for the retirement of the part of the issue before maturity. This has periodic payment of the obligation. Callable bonds has the provision that the issue can be cancelled or called. The call privilege enables the issuing company to pay off a bond issue prior to maturity. Perpetual bonds are those which the holders cannot redeem payment. This is commonly used in public finance where the debt or the government may be assumed to have permit existence. Bonds as differentiate from stocks. Bond is an instrument of debt while stock is an instrument of ownership. In a business, bondholders are given priority in payment of obligation over the stockholders. Bonds interests are fixed while divided to stockholder vary the income of the business and those declared by the board of directors. Bonds have maturity date to pay principal interest while the stock as capital financing do not have maturity dates. Bondholders have no voting rights nor influence in the management of the company, except if there are provisions in the indenture agreement, while common stock have voting right. Features of long-term bond: coupon rate, new bond rate are normally and set equally to market. Interest rates on bonds of comparable equity and maturity so that the bonds sell and near par value maturity. Typically, maturity on long-term debt is about 20 to 30 years. Call creator and bulb refunding an optional retirement provision that permit the issuing company to redeem or call the issue prioritized maturity date as specified price. Put creatures an optional entitles that the bondholders to sell the bond back put the issue where before maturity at a determined price and reinvest the process in the bonds when the higher coupons rate sinking fund the method of providing for gradually retirement of bond issue in which a certain amount is put aside annually or sunk into a fund account. Equity-linked debt, a conversion ratio, is determined which referred to the numbers of shares into which a convertible bond can be converted. Indenture is contract between the corporation and the trustee on behalf of the bondholders. The indenture contains the terms of the bond issue conferring the obligation of the corporation, the manner of its fulfillment, the rights and responsibilities of the bondholders, and the duties of the trustee. Trustee is the person or entity who handle monies or property on behalf of other in a trust is also it's the issuing corporation company with the provision in the indenture. Leasing, this is a means for obtaining economic use of an asset for a specific period of time without obtaining ownership interest in the asset. In the lease contract, the property owner leasure agrees to permit the property use lessee to make as the property for a period of time. In Return of the lease agrees to make a series of periodic payments to the lessor. Investment banking. The transfer of funds from servers to user includes two methods, the indirect transfer and direct transfer. Indirect transfer occur throughout a financial intermediary such as bank and an individual lends fund to the bank, which in turn leads to the bonds to the ultimate borrower. Direct transfer is the selling of the securities to investor in the primary market. Primary and secondary market perform different functions, but both are important financial institutions. Secondary market increase the willingness of an investor to buy securities, whereas primary market are the means by which savings are transferred to firm and government. Financial market, a mechanism that allows people to buy and sell trade financial securities, including stock and bonds, commodities including precious metals or agricultural goods, and low transaction costs and a price that reflect the efficient market value. Raising of capital in the capital market, transfer risk in the derivative market. International trade is currency market. In currency market, common money market instrument. Certificate of deposit are time deposit commonly offered to consumer by bank trip into tuition and credit union, purchase agreement or shorter term loans normally for less than 2 weeks and frequently for 1 day arranged by selling security to an investor with an agreement to purchase them, and fixed price and fixed date commercial paper are insured. Promissory note with a fixed maturity of 1 to 270 days, usually sold at discount from face value. Bank-free servers are interest-bearing deposits held by banks and other depository institutions available. Bonds that institution may borrow and lend, usually on overnight basis. Municipal notes are short-term, those used by municipalities in anticipation of tax receipt or other revenues. Treasury bills are shorter term of legislation of national government that are used to mature in 3 to 12 months. Foreign exchange swap consists of set currencies at predetermined that time in the future. Immediate term source of capital. Term loan by private commercial bank is extended for a specific, normally 1 to 10 years, repaid with interest, usually by regular periodic payment. Term loans by insurance company, premiums generated content, advance to insurance companies for varying from 6 months to 5 or more years. This give rise to fund held from holders by the issuer fund that must be invested into some owner. Term loans by government. The financing assistance provided by the government comes agricultural loans fund, is also government-sponsored financing assistance made available for the working capital and fixed asset acquisition requirements of agricultural and agribusiness projects. Balikatan sa Kabuhayan Program Grants Loan from the Livelihood Assistance for Urban Development and Export Development Assistance Program as joint and effort of the Technology Resources Center and the Bagong KKK. Apex Financial Services is a comprehensive financial planning firm dedicated to helping individuals and businesses achieve their goals. Short-term sources of capital. Short-term financing deals with the demands and supplies of funds of the period of less than a year, which may either be secured or unsecured. It's involved in lending fund barriers with the length of payment. Short-term credits are easier to obtain since its risk is lower. Commercial creditors are supplier extending credit to a client for use in manufacture process or selling goods for a profit. Commercial banks are institutions which individuals or firms may consider as sources from short-term financing. This is corporations which accept or create demands deposit subject to withdrawal by check. Commercial paper houses by short-term promissory note issued by finance companies and business firms that borrow funds in the money market. They finance the short-term fund requirements of borrowing firm. Commercial paper houses including banks and other financial institutions. Institutions like those engaged in selling insurance, educational, pension, and monetary plan. Finance companies are those engaged in exceeding short and intermediate term installment loans to consumers, factor or finance business receivable, and finance the sales of equipment. Factors perform financial services known as factoring, which consists of the purchase of account receivable outright with the resources to the seller for credit losses. Insurance companies provide a stable sources of short-term funds. They provide a ready source of funding for private business out of the premiums collected from their insured the clients. Section 1. Short title. This act shall be known as the Barangay Microbusiness Enterprise. Section 2. Declaration of Policy. It is hereby declared by the policy of the state to hasten a country can only development by encouraging the promotion and growth of barangay micro-business enterprise, which effectively serve as seedbeds of Filipino and try for novel talents and integrating those in the informal sector with the mainstream economics throughout the rationalization of bureaucracy, the restriction, the active of granting of incentives and benefits to generate much needed employment and alleviate poverty. Section 3 refers to all national government manufacturers, project, and their public service facilities, engineering works, and service contracts, including project undertaken by government-owned and controlled corporation. The registration and operation of BMBE. Section 4, registration and fees. The office of the treasurer of each city or municipality shall register the BMBS and issue a certificate of authority enable the BMBE to avail of all the benefits under this act. Section 5. Who are eligible to register? All citizens of the Philippines not otherwise disqualified by law who are at least 18 years old of age and who shall has resident in the Philippines for at least 1 year and in the place wherein they process to the vote for at least 6 months immediately preceding the election may register as a voter. Section 6. Transfer of ownership. Property of any kind may be transferred except as otherwise provided by this act or by any other law of the time being enforced. A mere right of re-entry of breach of a condition subsequent cannot be transferred to anyone except the owner of the property affected thereby. Incentives and benefits. Section 7. Exemption from taxes and fees. All BMBES shall be exempt from tax for income arising from the operation of the enterprise. The LGUs are encouraged either to reduce the amounts of local taxes, fees, and charges imposed or to accept BMBES from local taxes, fees, and charge. Section 8. Exception from the coverage of the minimum wage law. Pursuant to Section 8 of a RA number 9178, BMBES shall be exempt from the coverage of the minimum wage law, provided that all the employees covered under this act shall be entitled to the same benefits given to any regular employee, such as social insecurity and healthcare benefit. Section 9. The Lands Bank of the Philippines. The Development Bank of the Philippines or any government-owned or controlled bank or financial institution may obtain from any source as may be authorized under the existing laws and regulations such amount as it may require for the purpose of subscribing to the shares of the stock of rural bank. Section 10. Technology transfer, production, and management training and marketing assistance. A BMBE development fund shall be set up with an endowment of 3 million pesos. 300 million pesos rather, from the Philippine Amusement and Gaming Corporation, and shall be administered by the SMED Council, the Department of Trade and Industry, DTI, the Department of Science and Technology, DOST, the University of the Philippines Institute for Small-Scale Industry, Cooperative Development Authority, CDA, Technical Education and Skill Development Authority, TESDA, and Technology and Livelihood Resources Center, TLRC, may avail of the said fund for technology transfer, production, and management training and marketing assistance to BMBES. Section 11, Trade and Investment Promotion. The data gathered from business registration shall be made assembly to and shall be utilized by private sector organizations and non-government organizations for purposes of business matching, trade and investment promotion, information on dissemination. Section 12, Information Dissemination. The Philippines Information Agency, PIA, in accordance with the Department of Labor and Employment, DOLE or DOLE, the DILG and the DTI shall ensure the proper and adequate information dissemination of the contents and benefits of this act to the general public, especially to its intended beneficiaries, specifically in the barangay level. Penalty. Section 13. Penalty. Any person who shall willfully violates any provision of this act or who shall in any manner commit any act to defeat any provision of this act shall, upon conviction, by punished by any fine of none less than 25,000 pesos, but not more than 50,000 pesos, and suffer imprisonment of not less than 6 months but more than 2 years. In case of non-compliance with the provision of the Section 9 of this Act, the BSP shall impose an administrative sanction and other penalties on the concerned government financial institutions, including a fine of not less than 500,000 pesos. Miscellaneous provisions. Section 14. Annual report. The DILG, DTI, and BSP shall submit an annual report to Congress on the status of the implementation of this act. Section 15. Implementing rules and regulations. The Secretary of the Department of Trade and Industry, in the consultation with the Secretaries of DILG, DOF, and BSP, Governor shall formulate the necessary rules and regulation to implement the provision of this act within 90 days after its approval. The rules and regulation issued pursuant to this section shall take effect 15 days after publication in a newspaper of general circulation. Section 15. Separability clause. If any provision or part therefore is held invalid or unconstitutional, the remainders of the law or the provision not otherwise affected shall remain valid and subsisting. Section 17. Repealing clauses existing laws. presidential decrees, executive order, proclamations, or administrative regulation that are inconsistent with the provision of this act are hereby amended, modified, superseded, or repealed accordingly. Section 8. Effectively, this act shall take 15 days after its publication in Office of Gazette or in at least 2 newspapers of general circulation.